All right, we are at 11:35, so we've got this webinar for full hour. We'll open up for Q&A at the end. So we'll go ahead and get started again here. We will have this recording out available for all attendees. So we're really excited to welcome you guys to this webinar to talk about our new passive income fund. And this vehicle that we've deployed, started to make distributions on, and really excited to be co-investing with you as investors with, as well as be able to offer this. This is always consult with your legal professional and CPA before you make any investments. So definitely read this information here. And this is a 506c. So you must be an accredited investor to be able to invest in this offering. We'll dive into us. What's one of the most important pieces to any investment vehicle is who's running the operations, who's in charge of your money and making sure that you're getting your distributions, in this case, your preferred returns, distributions, and return on capital. So I'll let George kind of speak on the Elevate team and how we've grown to date.
Can you hear me any better now?
Yeah, hear you great.
Okay, good. Yeah, so as far as the Elevate team, we've spent about the past 7 years or so really building a strong team around us, one that is vertically integrated and can really handle every aspect of the operations when it comes to acquiring and operating multifamily real estate. Myself and Eric, who you see there, are the founders of Elevate. We've been in real estate for about 17 years now. We started in the single family space and then worked all the way up to where now we focus mainly on just large multifamily apartments. And then Brian, along the journey, came on and partnered with us as well. And then we've been able to add certain key players along the way. And as you can see, we've to date acquired right under 7,000 units. We've been able to exit a little bit over 1,600 of those. We've got an average IRR to our investors. These are on the deals we've exited at a 42.3%. And then our assets under management are over 600 million at this point.
Yeah, I mean, this is one of the strongest teams I've seen, and one of the reasons why I came to Elevate years ago to partner with them. This isn't built overnight. This team isn't put together. This experience doesn't happen overnight. This is through, really good markets, through down markets, and you want a team that's experienced all sorts of cycles. And, that average IRR speaks for itself, I think, and there's units acquired and units exit. I think it's really a testament to how vertically integrated Elevate has become throughout the years. And you can see, me coming on board, Nick, Joel, and Mina are all really important pieces that we've added to the Elevate team, and all worth their weight in gold. Tessa and Mike are very instrumental in the property management side. So to run a property management company is a whole different beast. So we brought on an outside CEO and COO to spearhead the property management company to make ourselves more investable, to make our investments more strong. They manage about 1,000 units of our 5,000 units currently under ownership, and the plan is to instrumentally have them take over all our different partnerships. We have different partnerships throughout the years, some where we're the majority, some where we're not. Any new deal moving forward, Elevate has to be the managing partner. We've seen good partners and we've seen bad. So, any deal moving forward, we're the lead. And what's really exciting about Elevate REM is any deal that we're placing the Elevate passive income fund in, they have to manage. So one, the deal underwriting has to be great, but we want Tessa and Mike on that forefront of the property management piece for our deals going managed. So these guys have a ton of experience on both the third-party property management side and ownership side. So we like having that, having them on the team and really make position on ourselves stronger here for our deals. So, what we're going to go over today, how the Elevate, the passive income fund pays preferred returns of 14.5% annually, nearly double the S&P with less volatility, less risk, how we're sending monthly cash flow distributions from day one from investing. We've distributed over 50,000 to date, and we're distributing about $13,000 a month from this income fund. Insights onto our streamlined approach, handling acquisitions, renovation, property management. So you can enjoy your position in the income fund without doing the hard work that we are doing, making it easy on you guys. How we've arrived here. Deep dive into some properties we own. We kind of talked about some of this, our processes, and why we think we will outperform the market, outperform other operators.
Yeah, so this talks a little bit about what I was mentioning, how we're vertically integrated and we put these teams together to make sure that we have the best outcome on our deals and the deals that we're funding. So you've got Elevate, which is the real estate firm, right? This is the entity where we acquire the properties in or put the fund in. And then we have Elevate Real Estate Management, which Brian was just talking about. That is the property management arm. We have some third-party property managers on some of our properties, and throughout the years we've used a lot of them, and we realized that they're not all that good. So we decided to go ahead and create our own management team, bring in a really strong team, and that has been night and day on comparison as far as the properties that we've taken over. And then we've got J&T Construction, which is our construction arm. Been around for 13 years now, and really strong construction team that can handle pretty much anything to do with rehab and even new construction.
Yeah, you guys are positioned in a very great time to be coming into the Elevate portal here, with where we're at in the market, how we're positioned ourselves to be strong operators in this time, and to be here for years and years to come.
I do want to mention the experience of this collaborative team here allows us to, like it says here, spot those good deals and be able to place the income fund into good positions, because we can quickly look at a property and inspect it and see what it's going to need as far as construction, what it's going to need as far as management, right? Where it's lacking operational, and we can step in and add value that way.
Yeah, 100%. And checking out what those exit assumptions are, where the positioning in. And that's kind of what we'll talk about here next, is the very unique position of this income fund, where it's not an equity position. You're more in this middle stack. And that's part of the reason how we're able to get this higher preferred return. You're not participating in upside, you're getting this set return, which is very high compared to what you're seeing in the market, 14.5% to 18%, depending on how much you're investing. So we have a target equity amount to be deployed about $10 million. We expect this to be held for 3 years. It very well could be 4. It could be 2. Right now the market is in a down market, so it's hard to have a crystal ball to say if that's going to turn around. Some people are saying survive to 25, live to 26. We're positioning this for to be out there for 4 years, which is less than your typical hold period of 5 to 7 years. But we very well think we could execute around year 3 to be your money in and all your money out, including your distributions. So that this is that high preferred rate of return of 14.5%. Usually you're seeing this much lower in syndications or any sort of deal, period. It's a high preferred rate of return. So that means that we are not getting paid a dime until you make that preferred return there. So adding less risk to you as the investor, and that half of that is getting paid monthly cash flow distributions. So, and this is a set return. This isn't a projection. This isn't if the deal hits these numbers that you're going to get this. These returns are set. So it's almost like a loan. It's almost like a lending vehicle where you're getting this interest expense versus an equity investment where you're getting participation in the upside, but also participation in the downside. So really unique vehicle that we're really excited to have out here, especially for those who are looking for cash flow, and a much higher preferred return, and who are able to have their money out there for this kind of 2 to 4 year mark. We're positioned here. Usually, your equity is here. You have the higher risk, higher reward. Here at the passive income fund, you're in between existing debt and existing equity. So you're protected by this whole layer of equity above you. And we'll go into one of the deals that we're actually funding in and show you how the last dollar of the income fund is going to 65%. So you'll still have 35% behind you. So your last dollar in is in a much lower position. It's not in the senior debt position, but senior debt right now is getting what, 7 to 9%. We're here getting 14.5 to 18%, depending on your vehicle that you choose, depending on how much you're investing, in 50 to 100,000, 500,000, or $1 million investment there. So, yeah.
Just to stress again too, Brian, us as the fund managers, once again, we're not getting anything until our investors get their capital back, plus that 14.5 to 18%, like Brian mentioned.
Yeah, and we're in a very unique time. So I think that this income fund comes at the perfect time in the market where valuations are down, where we're able to because of how active we are, we've seen preferred investment vehicles. We see what these institutions are doing, and we're able to match that and even offer a higher return because of how active we are in the market. We're able to see what's being lent in these higher vehicles where people are able to pay. And kind of see what the market rate is for this, navigating that environment. So, who's to say Elevate Income Fund number 2 and 3 is going to be like this? Who knows if we're going to be able to always? I don't know that we'll always be able to offer this, but once you invest in here, you are locked in at this preferred return. So, this is our first vehicle of this. So I think you are getting in at a unique time to be able to capture that high preferred return and not getting any fees to you. So if I invest 100,000, what does that look like to me? So you are getting that 14.5% preferred return, average annual return, and then half of that is paid current and half of that is accrued, and that's monthly here. So your total interest right here for a year is 14,500. That's what it breaks out to 1,208 a month. 604 is distributed to you monthly cash flow, and 604 is accrued. So if you had the investment out for 1 month, you would be owed that accrual of both the accrued interest, and then you would be paid that 7.25, depending on what your investment is. So for the $500,000 investment, this is at 8, and then for $1 million investment, it's at 9, and split between the average annual return. So this is what it looks like for you if we were to hold it out for the full 4 years. Getting you back those 158,000 here.
And just piggyback there. So like every month, same exact day, we're sending out our distributions. We haven't missed one distribution. We don't plan on missing any. And you can expect that 7.5 or 7.25% hitting you every month at the same time.
Yeah, so it's a great vehicle. You know, you're getting monthly cash flow without dipping into your principal. You know, if you're investing in stocks and bonds or some sort of mutual fund and you start withdrawing from that, you're eating away at your principal. But because of this income fund, your principal of 100,000 is untouched. It is actually still growing at the same time. We're able to give you that as cash flow distributions. So here's our investor returns. You know, legally we're supposed to have to say target, but these are the set returns. These aren't going to fluctuate month by month or how long you have them in there. So $100,000 investment, like we kind of went through here, this is your class A investment. Class B and C for $500,000 and $1 million investments. We are adding that increased incentive here. We have some larger investors on our network and who are capturing these higher investments. So at this you can kind of do the backwards math. Some people like to look at it as, you know, they have certain monthly income goals here. So here's what you would need to get to these monthly income goals: 10,000 a month if you invested 1.3, $20,000 a month if you invested 2.6. $1,000 a month at the 165,517 example.
And Brian, that's just the current pay, right? So you'd be accruing the same amount as well. You'd be getting paid that 1,000 and accruing 1,000.
Yeah, every single month. That's exactly right. So, you're getting the cash flow and growing your principal balance actually. Yeah, you're not only preserving your principal balance, you're actually growing it by this much a month outside of your distributable cash flow. So how are we able to get this, you know, in the current market? How are we able to, what are we seeing and what kind of deals are we doing this in? So here is a deal that we've already targeted for deploying, and we're deploying it in right now. The existing debt is we were actually able to negotiate with this income fund the existing debt to be split in two. So the existing loan was $38 million, but for our position in this deal, we wanted the income fund to be able to sit above some of the existing debt, so we weren't above 65% loan to value. So your last dollar in, or loan to cost here, is 64%. So your last dollar in, you still have almost $20 million sitting behind you in this particular investment. So we really like this fund here. You know, the goal here is to put these in. When we're underwriting deals, we want to make sure not only is this capital being able to be paid back, but also this being able to be paid back. So if the deal supports our income, our passive income fund, plus what's already in the deal, then that's a loanable deal. You know, if we can leverage that in a 2 to 4 year time period, then that's something that we're targeting. So this is positioned well. This is also what we were able to negotiate on this property. Elevate REM is going, or EREM, our property management company, will now be managing this property. So that's kind of the negotiating power you can get with this sort of investment. When you're investing $4.1 million, we want extra protection on that. Besides its positioning in the equity, we want to make sure that our property management has literally hands on the asset and is walking the property every day, you know, has control. We want transparency on that property management. So that's what we were able to negotiate with this particular deal. And that's what we're seeing. We want a good combination of its positioning in the capital stack, as well as being able to support our 14.5 to 18% while still underwriting to being able to pay out this existing debt and equity. So, you know, I don't know if you have anything else to add here, George, but I think, you know, this really shows you, you know, it's preferred, you know, it goes back to that picture, that Eiffel Tower or a building picture of where we're sitting in this income fund right there in the middle. And this one is really nice, coming in close to this existing debt on the deal.
Yeah, no, I mean, I think this is a great example. So, this is what we're doing on every deal that we're going to be funding. We're negotiating and making sure that we're putting our investors in a less risk position as possible.
Yeah, and so we're seeing preferred returns out there, and we're being able to see the market. And this is something that we're going to be having ownership on, and our property management company in place. So, we talked a little bit about this example deal. These are the kind of deals that we're looking for. One where Elevate is going to have control over it, our property management being able to be positioned there. Its positioning in the capital stack and its ability to be recouped, not only for that cash flow, but for original principal. Like I mentioned, we've sent out close to $50,000 in cash flow distributions. It is May 8th. A week from today, we'll be sending out approximately another $13,000 in cash flow distributions for those investors that got in before the end of the month. So we really like this opportunity. We've been talking about having a fund for years now, since I came on to Elevate, and this is a unique investment vehicle for those who want to diversify outside of your equity holdings and real estate, and being able to offer that higher preferred return. You get that higher set return and that monthly cash flow. So we're providing stable monthly cash flow, where a lot of deals right now are pausing distributions or even doing the opposite, asking for additional capital, where they were expecting to do these cash out refinances, where cash in refinances are common. This is a stable position where you're able to capture that set return. It beats the heck out of high yield savings accounts. There are money market accounts that are now offering 5 to 6%. Who knows what will happen to those once interest rates start to come down, but your interest rate here is locked for the life of the investment of that 2 to 4 years. We do like that it is a shorter hold of this 2 to 4 year time period. So you're able to get that out, and hopefully we'll have another income fund by then, or a different type of vehicle to place in. We talked about the lower leverage in the capital stack, very nice high security position, de-risking the deal for you as the investor, which was one of the most important things investing right now. There's a lot of cash on the sidelines right now, but there's a lot of cash being deployed right now. We're seeing a lot of institutions making moves in the equity space, deploying capital, the Blackstones of the world, signaling bottom. So, this is a place for you to put your money to work, at the same time, beating these high interest rate savings accounts, and sitting in that nice position. We're hedging against inflation by investing in real estate vehicles. We're always going to be invested in multifamily. So last year, the rate of inflation was 8.6%. So if you had your money in a mattress, or a low savings checking account, or even some of these high yield accounts, your money sitting in those accounts is actually getting eaten away by inflation. And this is a reported inflation. There's a lot of money being printed right now, and I think this could probably be even higher, depending on what reports you're looking at.
Hey, Brown, we had a couple questions come in. I'd like to address them real quick. So first one is asking, how do we find these deals? If we're working with brokers or in-house brokers. So these specific deals, you don't really find this with a broker. Once it gets to a broker, it's more of something that wants to get retail value for. And some of the brokers know what we're looking for, and they can maybe help us there. But mainly this is coming from our network. We know a lot of the operators in the space that own properties, and they're aware of us having this fund and what we're looking for. So we do get a lot of influx from that. And then we also have access to software that we use, CoStar, CorrectIQ, couple other ones, and we're able to scrub data and see any loans that are in trouble, any properties that are just not performing well, and then we can go from there and reach out to those owners. So that's how we've been finding them now, and I think we have had a couple brokers, but mainly it's our network and also the software. And then as far as how do we manage the different deal opportunities, I'm not sure if that question is as far as the fund management side of things, we really lean on our investor portal. Everything is in there. All the distributions are done through there. Our investors have access, right? They have their user profile and they can check everything in there. Our K1s are posted inside the portal, so everything is done through the portal. And then the last one I see here is as far as monthly income. So is the fund set up for monthly income? So yes, we do get the current, you do get the current monthly income that we spoke about. And then we've had this question come up quite a bit where if we can reinvest instead of taking that cash flow. Currently it's not set up that way, but we may make some adjustments in the near future. So, because we've had that question come up quite a bit.
Yeah. So I mean, if you're investing a good chunk in your, I would advise to set up a separate account, and then once you get that principal back up to $50,000, then you could reinvest that. It's up to you as far as how you're reinvesting that principal. It depends how much you're getting in monthly cash flow. So I mean, if you're getting $5,000 a month, we wouldn't be able to take that minimum amount. But once you get that to $50,000, we could absolutely look at reinvesting that. 100% there. And because of our presence in the market, our size in the markets, a lot of these we're partners with. We have a lot of partners that I kind of mentioned with in the beginning, whether we had a minority ownership or just knowing the partners, we've been able to position ourselves for that, finding the deals. Someone also asked, do you accept non-accredited investors? At this time, it is not open for non-accredited investors. We do have a non-accredited investor opportunity coming out. So if you are not accredited, I went ahead and put Mina's Calendly link in the chat. So you can schedule a call with Mina right there for any questions on this opportunity or anything at all. So we kind of talked about this, experienced deal sponsors. We are going to be the deal sponsor on right now, our current strategy. This could open up, but for the income fund, we want to be involved on the deal sponsorship. Growth markets, we're investing in business-friendly, landlord-friendly areas. That'll never change. Clear path forward on the business plans. We want to make sure that the deal supports our income fund plus that 35 to 20% beyond us, to make sure that we're really in a secure position, mitigating that risk. Choosing the right sponsor. We've had a ton of experience with this. George and Eric specifically have, they have had, to get started in multifamily, they may have taken minority positions in certain deals where they've seen what a good partner looks like and what a not so good partner looks like. Real estate has been such a good vehicle that there's been a lot of people that have come into the space, and it's specifically multifamily. So, when it's a down market, you really find out who is here for the long term and who is sticking their feet in the ground, and what partners you can rely on. And, same thing with property management. You have to really take the lead. What we found is you have to take the lead yourself if you really want to see the best results. And so laying out that foundation before any kind of any kind of funds are being placed, making sure that we have full control, for the success of the investment and for the success of the fund. So, You know, these are some of the things that we do: background checks, net worth and liquidity, personal guarantees is what we're asking for on this. Also, credit history, successful exits, just like you're seeing on our team here. So here are the markets. Here's our market focus. You know, we have quite a presence in South Dakota, Texas, Oklahoma, Arkansas. We're growing our presence in Kansas and Missouri. We're seeing some of these Midwest states really perform. Always like the Texas story here. South Carolina is a market that we're in. Georgia is a market that we have been in. You know, we had an amazing deal that we exited there. We've been looking at that. I'm actually from this area, Cincinnati, tri-state area. We've looked at properties in this area. We haven't executed on any, but we're keeping an eye on some of these other markets, North Carolina, and then we have a property in Jacksonville, Florida as well. Yeah, something that we're looking at is the strong population growth, job growth, school ratings, and new developments in the process. So the business plan, we want to have a strong business plan, you know, where we're able to exit in the next 2 to 4 years. These are going into existing deals. It's not going to be new acquisitions where you're coming in with a preferred layer where you could be holding up for 5 to 7 years. You know, this is existing deals where the deal has had some seasoning to it. We can see how the deal is doing right now under its current ownership and where we can see in the next future. We want to make sure we have conservative underwriting assumptions. We talked about building out that team. Nick Bowden is in charge of underwriting. He has an extensive background in analysis and one of our best hires we made last year, making sure that we're really looking at these underwriting assumptions, worst case scenarios, best case scenarios. Personal guarantees is something that we're asking for. You know, any kind of deal we're having bad boy carve out, any deal that we're doing has these bad boy carve outs, and making sure that what happens if there's a non-payment and the recourse that is attainable there. So we put together, so we had this fund for a little bit, put some frequently asked questions from some of our previous investors that they had before investing, and something that we're wanted to address here. So when do I start receiving cash flow distributions? Do you begin monthly? So, you know, day one from the first month after the initial funding. Usually the cutoff is at the end of the month to be able to capture the next month. If the deal sells or gets refinanced in year 2, you know, with this intended 4 years, we would have the discretion to reinvest those funds or return the capital invested plus the additional accrued interest to date. So our goal here is to be able to recycle the capital. So our ultimate goal here is to get you back that capital. Us as a fund is going to do what's in the best interest for the fund. So this very well could happen for refinance in year 2 or 3. I don't think that's very likely. You know, interest rate, they've been talking about interest rates coming down all year. We have yet to see the interest rates come down. We're not planning on any major interest rate decreases. I think there will be a slight one at the end of this year. And then maybe we'll see what happens next year. But, you know, our underwriting has to make sense with whether there's interest rate drops or not. What happens if the entity that we're lending to does not pay? We will have personal guarantees on these funds out. So we could take the fund itself could, you know, go after the sponsors that are funding it. So, you know, our goal is to not get to that position, but it comes with an extra layer of protection there. We had exercised our takeover rights and become the managing member of the asset. Elevate is actually not charging any fees. You know, when we first rolled this out, we looked at putting, you know, to be putting some sort of fee on there, but with this being our first fund and where the positioning is, and we do not really have a fee here. You know, if we're lending it to investment and we're only paying out 14.5%, we could take the spread that the deal is, any deal that we're putting in is getting charged the 18% that the highest level is getting paid. So if theoretically, if we had for all $100,000 investors, we could be making the spread, but we wouldn't be realizing that spread until after your investment is being paid out. So it's no upfront fees. I should clarify that. How safe is the investment? No investment is guaranteed, whether that's, any kind of investment. I would be very hesitant to invest with anybody that says that their investment is a guarantee. But, as shown page 6, this is a very good position for your investment. We've been very active in the market, seeing what other institutions have done, from small institutions to large institutions. So we really like this capital stack positioning in it. So
Ryan, real quick, couple questions that I answered some of them already through text, but there was a couple that I wanted to talk about. So one asked about, do we only invest in Class A properties? Also, do you only invest currently in multifamily assets? So multifamily assets, yes, we currently only invest in multifamily assets. As far as the Class A properties, that is on acquisitions, we're definitely focusing a lot more on Class A. We just don't see a lot of the Class C properties priced where they should be at this time in the market. Not that we won't, so we will invest in Class C deals if we feel like the price is right. Same with the fund. On the fund, we'll look at Class A, B, C, any type of class, as long as the numbers make sense and the criteria fits what we've laid out for you here today. As far as the evergreen fund, so we're keeping this fund not an evergreen, right? Not opened, but we're thinking several more months where we're going to keep it open, and then we will be investing or have invested in different properties with this fund. And then in the future, we've talked about possibly opening up an evergreen fund. And then the last one here that just came in is the fund characterized as preferred equity, mezz debt, or some other designation. It would be more towards the preferred equity, unless if the lender in first position allows us to call it a mezz, we will. But a lot of times the lender doesn't like that, so in that case, it would be a preferred equity. Yeah, and if somebody has any properties they want to send our way that they think we might be interested in investing in, you can go ahead and shoot us an email. I'll go ahead and put that. It's info@elevatecig.com. And we'll take a look.
Yeah, one fine about your buying criteria in the event. So we kind of talked about it. We want to be in good markets, good assets that can withstand down scenarios. So if you want to find out exactly, you can also schedule a call with Mina, who can go over that even more. So I'll put his Calendly 15-minute Calendly link in the chat here for you guys to schedule a call. We've got about 15 minutes here left on the investor portal. So, or on this webinar, I will take you guys through our investor portal real quick so you can kind of see what that looks like. I will give you guys my investor portal. So any Elevate deal that I'm putting out there, I myself am personally investing in. So this is my investor portal. Someone asked about the investor portal. This is Syndication Pro. We really like the user friendliness, tracking all your tax documents. In this case, it'll be treated as interest income. You can see how much I have here invested with Elevate. So you'll go to invest, And this is where you'll see the real estate income fund. Kind of what we talked about here, 2 to 4 years, 14.5 to 18%, depending on how much you're investing here. So targeting high population growth, job growth, business friendly. So here's where you'll go. You'll be able to review the subscription agreement, the operating agreement, and this investment summary that we went over here. You'll want to review those. Once you have reviewed those, you'll go here. We accept investments as self-directed IRA, trusts, individuals, LLCs. I started off investing as an individual. I'm slowly transferring those over to my trust. And so I'll just do this for an example. Class A, 50,000 here. Sure. That's because I already invested in this. It's asking me if I want to invest again. And everything is available via e-sign. I'm going to skip this for now, but these are going to be the documents that's going to sign you and lock you into the passive income fund. So here you'll go. This is recommending that you ACH it. ACHs, you know, they can take 5 to 7 business days. I personally like to wire my funds, but it's totally up to you on what you want to do here. ACH is good too. You know, sometimes you don't have, some of the banks will have a wire fee of $15, so you can avoid that ACH. ACH just takes, be ready for it to take, you know, a business week here. And then if you wanted to wire it directly, here are the instructions right here. Those are mine. And then you can indicate here when you're going to wire it. Mina will definitely, once you make this, he'll reach out and can kind of confirm that. So you'll submit that. That makes my reservation right there. So that's at, I'll put the portal in the chat here too, if you're ready for that. elevate.imvportal.com. Someone asked, state income tax filings required by investors. We will do the tax filing for you. You'll want to give those documents to your CPA. So we'll provide everything you need to hand over to your CPA.
Any other questions?
Yeah, and I put the Calendly link in there if you guys want to go in depth. Also the investor portal, if you guys have reviewed the documents. So I know some of our investors we've talked to, I see on the participant list. If you guys now are ready, you can go straight into that portal and invest and get that monthly cash flow rolling and started. You know, this is our first income fund. You know, I don't know how long, it depends on the demand here, how much is funded. I think our target is around the $10 million mark for having funds being deployed. So, you know, if you are ready, I definitely encourage you to get in while you can.
Okay, we appreciate you all listening in and make sure to reach out if you got any questions.
All right. Have a good one.